stunning to monitor the media's lack of interest in the whole Maui story. I've been in this business for 30 years. I'm stunned, but I'm not surprised. The incident seems to be the story here, right? But the true story, the media knows it is not allowed to tell. Is it a coincidence that the Maui police chief is the same man who was in charge in Las Vegas during that massacre that killed 58 people? Is it a coincidence that the Maui property, owned by million and billionaires, it wasn't touched by the flames while homes of the locals all burned?
What she fails to also mention is how the media hasn't even once interviewed a grieving parent. Not a single parent looking for their children. Not a single interview with a child. Not a single interview with the schools.
Was it a coincidence that the largest system of outdoor emergency sirens in the world never made a sound as the fire devoured Lahaina? Was it a coincidence that at the same time, very same time, all the water was turned off? Was it a coincidence that police were ordered to block off streets and to funnel all the cars trying to escape? Think about this coincidence. That governor also signed an emergency proclamation on July 17th, 3 weeks before the fire, about housing of all things. Is it a coincidence that the government put up a black fence around Lahaina, or that the FAA grounded all drones from flying over the affected areas? Is it a coincidence that since at least 2011 there have been plans to make Maui the first smart city run by 100% renewable energy? And that it must be a coincidence then that the locals whose homes did not burn are now being evicted from their property. And of course, a total coincidence that all the fact checkers who are checking these facts, who say everything I just told you is just a coincidence, are also owned and run by BlackRock.
Okay, so I just want to get clear. This chart on the Bitcoin, what's going to happen to the price of Bitcoin?
Bitcoin is what I call the lead dog. Okay. It is the lead dog of the crypto pack, and kind of like Amazon was the lead dog for the dot-com bubble, okay? And I compare Bitcoin, and like I said earlier, directly with Amazon. So I'm looking at the Bitcoin bubble hit 73, peaked there. It's been going sideways because no bubble and everything's saying the bubble's not going to burst. Nobody wants it to burst. It's been going sideways, but in a downward thing. It's been having lower highs and even lower lows. That's what this chart is. It's called a declining megaphone. Megaphone is when it goes like this, not a channel is straight, parallel, a triangle is converging. This is a megaphone pattern pointing downward. We're going to get resistance if Bitcoin keeps going up. It's at 65.5 today. It's going to get resistance at 68,000. If it even makes it there, the final wave up usually does not go all the way up because it would make it too obvious. And if it goes down, we could see a sharp move in a short period of time down to the bottom of this channel, megaphone, about 40 to 42,000. And if it breaks that, we're back to the 15,600 lows, okay, in Bitcoin back in 22 or whatever, the last major.
So your prediction is Bitcoin is going to drop to 40,000.
And Bitcoin leads everything else. Crypto goes down. Stocks will follow that, and they have generally followed on 3 to 6.
What's your S&P number?
Stocks peaked in July. That's a 4-month lag that stocks are following Bitcoin already.
Okay, so you think stocks are going down, and what's going to happen?
But I'm looking at Bitcoin because Bitcoin will tell you when to expect stocks to go down. It's very hard to predict this. Stocks don't want to go. Nothing wants to go down. Nobody wants this bubble to burst, let alone the government and the Federal Reserve, okay, as we've already discussed. So markets have to get bad enough on their own to start to trigger fear with investors, and then they start thinking differently. They start thinking, oh, they can crash, sort of thing. So you have to get some momentum. So if we're going to see this, Jason, Bitcoin's going to lead this trend, and that's why
we got it on the Bitcoin. Okay, so I got it. So S&P is just over 5,700 right now. Yeah. Where's that going?
Well, it's got to go down about 40% just to get back down to the late 22 lows.
Ouch! Oh my God!
Yeah, that's when you realize
that's going to be painful.
How big a bubble is. When I say, wait a minute, a 40% crash is just going back a year and a half. Yeah. Whoa, that means you had a really big bubble to go that much to have to crash that much.
Okay,
so that's why I'm saying you got to be cautious here, because when this happens, it's going to come fast. The 22 crash came fast. This will come even faster than that. Okay.
So Bitcoin is going.
But if Bitcoin starts to go, that gives you a little warning for stocks. So if it starts to get more serious, again, you see this pattern playing out, then yes, then you can get more serious about selling your stocks and so on. So you don't have to leave the bubble too early.
All right. So what I'm saying is Bitcoin is going to go down by a little more than a third. That's your prediction, right?
That's over 40% just to drop to 40.
Oh,
Yeah.
sorry, 40.
I think that's 46% just to get to the bottom line there.
Hang on, I just want to get clear on a couple things. So Bitcoin's going to go down by 46%. S&P is going to go down by about 40%. What about gold? What about precious metals?
Gold is in its final bubble. Gold last time bubbled up with everything else. All the gold bugs say, gold's going to be the savior in the downturn. No, gold ended up going down in 2008, not as much as stocks, but it went down in the end. And this time, gold has bubbled up way more. And so gold, I'm predicting gold will peak here around 27, 2,800, wherever it does. And when things crash on a lag, gold will end up, its support is around 1,100. That's a big crashing. That's maybe a 50, 60% crash in gold. And people think gold is going to be the safe haven. It won't be the worst place to be. But I'm telling you, in 2008 proved this, in the end, it will not be the safe haven. Treasury bonds are the safest thing on earth, despite our massive deficits, because everybody has bigger deficits than we do, and we're still the lead dog.
And, we should really, it's fair to ask, what will the value of cash be? What will the value of treasuries be vis-a-vis inflation? I mean, you've been pretty much a deflation guy for quite a while.
Yeah. First of all, there's very little inflation now. In my scenario, inflation will be 0 to negative. It was 0.4% in the last crash, okay, in 2009. So inflation is not an issue. Treasury bonds are the safe haven. They went up 45% when gold and stocks and real estate and everything else went down, okay, and commodities and stuff. Treasury bonds were the one thing that went up 45% in 2008. And then there was time to sell them because that was just a safe haven play. I mean, who wants a 2, 3, 4% yield long term, okay?
Okay, but I just want to be clear. So Harry Dent is not worried about inflation.
No.
Right?
I am not. They could blow $5 trillion in the economy and you might get a quick blip like we got 9%. That 9% blow, that came with COVID, that would have been over in a year if they hadn't have done anything.
So in other words, you're saying it's going to be either flat or a little bit of deflation, right?
Yeah.
That's your prediction?
Yeah. Only two scenarios I have in a slowdown. We have to have a slowdown first. So that's the first thing I'm looking for. Bitcoin to start crashing, stocks to follow. Stocks going down alone will make people a little more bearish, and then the economy to start to slow. And then it all bubbles once they don't have to get going too much. They're so overvalued, the momentum gets very fast.
Okay. Let's talk politics for a minute if we can. I'm sure you have some opinions on this crazy political environment we're in. What do you think? And does your strategy change depending on the election?
No, it really doesn't. Most people don't get to do even a fraction of what they said they're going to do because of the split Congress involved. Yeah. It takes forever to pass. People acting like suddenly Kamala's going to get things and do all these things, or Trump is going to cut all this by 80%. Not going to happen. So no, and it never does. What I would be good, Jason, is talking to people like running for president and tell them when to run or not. Okay, this isn't an election to win, especially not for the incumbent. In other words, Trump would do better in this scenario if he wins and the economy crashes, as I'm saying, right as he's walking in office. There's no way you're going to blame somebody that just walked into office, okay? Franklin Delano Roosevelt didn't get blamed for the Great Depression. He walked in well into it. Ronald Reagan didn't get blamed for the early 80s recession. He walked into when it already just started in 1980, okay? So that's the person who gets favored. And then it only takes 2 to 3 years to turn around the worst downturn, i.e. the Great Depression. And so by the time re-election comes up, whoever does win this election, either one of them, will look good and probably get reelected, but particularly if it's a new guy, Trump, that comes in. Now, Trump cannot run again. Now, Kamala is kind of in the middle. She's not Joe Biden, but she was her vice president, so she's a little more attached to the incumbent. If suddenly she walks into office and the economy goes down, well, people will blame Biden, which means indirectly they'll blame her to some degree. The problem is he's not responsible for this, okay? This bubble, the Federal Reserve and central banks have cranked up this bubble around the world. And Biden didn't tell them that they liked them to crank it up during their term, but They're not in control of that, but people will still blame. So I would not want to be elected if I'm Kamala or Joe. Joe Biden got pushed out, but he's going to thank God he got pushed out. Okay. He's the guy that would have looked the worst if he'd have won. And then while he's getting increasingly senile, the economy gets senile faster than him.
Yeah, interesting. Harry, you've done some interesting research on things like solar cycles and stuff like that. I'm curious, what is that and how does it affect us?
Yeah, the sunspot cycles are like 11 years on average. They vary some, and sometimes get a little longer or not, and you can track that. They affect business activity more. When the sunspot cycles are high, you're more likely to get higher value. Valuations, I'd say they affect to some degree, but they don't affect the economy like these. The two things I track, a 39-year approximate generation cycle, which I can measure exactly how many people are going to move into peak spending from a generation. And the technology cycle, you get two bubbles or booms and busts in a 45-year time frame, like the bubble into 2000 and the bubble into late 2021. Those were, 21 and a half years apart, right about that half of that 45-year cycle. So those are the two reliable cycles that I can predict and have the most direct impacts on the economy, way more. I look at any cycle, okay? And I like to study cycles in general, and I've studied more. If I told people all the cycles I've studied, they'd think I was a nutcase, okay?
Yeah.
So I don't talk about all that. I don't want to confuse people. But I study other cycles because the more cycle you study, the more you get insights on what happens in each phase. Every cycle breaks into 4 seasons, just like our annual cycle and sort of stuff. So I have a whole wealth of knowledge on cycles, but these two cycles are the ones, and when you're in bubbles, that the bubbles always come from the 45-year innovation technology cycle. That's what bubbles up. It's the tech stocks that lead bubbles, not the Johnson and Johnsons.
I'm curious though, how do sunspots influence the economy? Like, why would they do that? What causes that?
Oh, that is a layup. More energy is falling on everything from plants grow faster. People feel more energy. People go out on this beach to soak up what? Energy. They're sitting there doing nothing, relaxing, soaking up energy. So it is literally more energy or less energy falling on everything on Earth. So that's an easy one for me. And I say it's an indirect. Doesn't mean people go out, oh gosh, I'm hot, so I'll buy a popsicle, although that happens. But but I can understand that. And it's not, this would be a bigger cycle I track. It's not anywhere near the impact of these other two cycles I'm talking.
Yeah, very interesting. Harry, anything else you want to say as we wrap it up? Of course, give out your website where people can get your newsletter. Anything else you want to share?
Yeah. Here's the most important thing, and I hate to say this because the guy lives right down the road from me, okay, here in Puerto Rico. A lot of financial newsletter people are here in Puerto Rico because it's a great place and low taxes.
Yep.
Inflation is not going to be the outcome of this. It's impossible. An asset bubble, when it deflates, it takes money. This is money that's been created. Money comes out of thin air already, but financial assets blow that even more. When financial assets deflate, again, biggest number in the world is 630 trillion in financial assets, 6 times the GDP. That's what's going to happen here. This is not a normal downturn where businesses overexpand and they lay off workers and that causes more layoffs because it's, It'll be that. This is a whole nother dimension, and that's what was different from the 30s depression and the 70s long recession. So that's what you got to think. What you got to worry most about, your job second, you got to worry about your financial assets, real estate and the stocks and things like that you own. Anything that's financially valued has been blown up to at least double its value. Stocks more so, and real estate has to correct. I used to say 50%. Real estate's gotten the point to just get back to where it was before the bubble started. And that's in 2012, Jace, okay? That's at the last correction in real estate. That's not that far back. Stocks have to go to 2009 to get back to fair value. Real estate just has to go back to 2012. So you look at I tell anybody in this audience, look at your real estate. If you can determine what it was worth, let's say in the middle of 2012, give or take, that's your potential downside. Are you comfortable with that? If it's 20%, most people be comfortable with that. I'm telling you, it's probably going to be 40, 50, 60, 70%.
Oh my gosh. Wow.
That's
Okay,
how much
Harry,
this
I gotta,
bubble
I gotta,
has
I gotta
gone
ask you a
up.
question. Why does real estate have to go back to the 2012 price? Why?
If you study every bubble in history, and I actually, the chart in there, my thing, the first one, I think South Seas bubble was the first one. Okay. It
Yeah,
was like one individual stock. There
yeah.
was a
John
joint.
Law, I know.
It went up from 1 to 99 and all the way back to where the bubble started at 1. Bubbles erase themselves and then start going back up and normal. In other words, they race more than they should, because just as they go up more than it's worth, they also end up going down more than they should. So that's why bubbles are so treacherous.
I
I
don't know
look at
why.
2009 is where bubbles would have to go to erase themselves for stock. That's when it started. And I look at 2012 for where real estate would have to go to erase its bubble. And that's and it can be different in different areas, but that allows you to look at different real estate. Real estate's much more varied than stocks.
Yeah,
There's a lot of real
obviously.
estate that won't go down that much.
Yeah, yeah. But I just don't understand why you're saying it has to
You're
go
gonna have to ask
down.
God on that one, Jason.
Yeah.
I'm sorry.
Well, no, I know, I
This
know,
is the
but
law of nature. Things go up, they go down. Everything's
I know
cycles.
that
People say, Harry, why are there cycles? I don't know. Ask God. Everything goes in cycles. There's
yeah,
menstrual cycles, okay? There's cycles in everything. You know, there's
I know.
mice cycles. I
Okay,
mean,
but let me
you
talk
look,
for a
we go
second.
like
Let me
this.
talk for a
There's
second.
sunspot cycles. Why does sunspots have cycles? I don't know. They do.
Okay. So here's the thing I'm pointing out is that how much coffee do you drink, by the way?
Three Nespressos in the morning, and those aren't a full. Those are about a 6/10 of a cup. So about two.
Wow, that's not much. Okay, you just have naturally a lot of
Oh no,
energy.
yeah, no, I don't need coffee. You
Yeah.
get me on a stage, and yeah,
I know. I've seen you on stages many times. Okay, so but here's the thing, you know, essentially you're saying, I mean, look at, I don't know about the stocks. I'm not that versed in it, but the real estate I know, right? It's like looking at a chart. It has to go back to the trend line, the support level, which
yeah.
you're saying is 2012. Okay, got it.
2012 for real estate. Yeah.
I know, but that doesn't take into account changing demographics,
You know,
housing
Jason,
inventory.
all I do is look at history, and every
Yeah.
bubble's the same, no matter where it came, no matter. I know what you're saying. People always say, yeah, but you know how many people coming after every president say, but Harry, my place, if you saw it, it's so special.
No, it's not about, I
You know
agree
what
with you
goes
on
down
that.
the
I
most,
hate that.
Jason? The special real estate goes down the most. Why? Because it's so special, it bubbles the most.
I hate when people
All I
do
care
that.
is bubble up, bubble burst. I could look at any bubble and tell you where I think it's going and not have any idea what it was. It could be mice droppings. Okay. And if I see a bubble, I'll say, okay, well, this is probably going to go back to about here. I'm so sorry. I can do that.
Yeah. Oh,
Bubbles are
yeah,
bubbles.
right. Okay. You know, it doesn't take into account changing population, changing
Oh, everything does.
demographics.
You don't have bubbles in places that aren't growing already. You don't have bubbles in depressed places. You have bubbles in the new the new technologies are where the bubbles are. This is the new high growth stuff. So bubbles aren't random either. They come where there's very high growth, and human nature is to overreact to everything. We oversteer, overdo everything. Things get good long enough, we get overly positive about everything. Things go down long enough. People say life will never be the same. We'll never come back. Blah, blah, blah. My kids will never, get good. People overreact. That's what we do. We just overreaction machine.
You talked about technology several times. Just before you go, I want to ask you some of these. Like, is AI a bubble? That's the big thing right now.
This is
Everybody's talking about AI.
Early stage bubble. The crypto bubble is a bigger one. Crypto bubble, literally, when a speaker got up at my own conference and said it's about the digitization of all financial assets in the world, I'm like, I get it now. That's huge. 630 trillion. Even if you just 10% of that is huge if you can improve it. So that's when I got that this is a big thing. So AI is also a big thing, but AI, Jason, I was talking about this in my Roaring 2000s book in 1998. I called it the automation of management and professional work. We automated farm work and then factory work. And then we've automated everything in the office, bookkeeping and all this stuff, automated computers, simple left brain stuff. Now we automate professional and manager. 80% of what lawyers and doctors and all these people and high-level managers do is automatable too, okay? Anything left brain is just more complex. but anything left brain. So now we automate that, and that brings a whole nother revolution because that's where the highest costs are. And the people, and more of us are getting higher education and becoming these professional and managerial people now that we've automated everything else. So we're always automating the present jobs, and that opens up people to move into new, higher human creative. We're going to have to do more and more creative right brain work because computers are left brain machines. Anything left brain can eventually put in a computer and be done at a fraction of a cost at the speed of light. That's what you're competing with, anything left brain.
Pretty amazing, no question about it. Harry, where do people find you and get your newsletter?
Okay, harrydent.com. That's simple. That site, we have hsdent.com to learn more about us, but this, you go to that site, that's how you just get on our free newsletter. All you do is push a button, put in your email, you're done, okay? And that, I mean, right now with if I should be listened to just as an alternative voice here, because anybody'd have to agree, this is not normal times. This is the greatest expansion, the most global, the most volatile things happening. You need to listen to alternative voices here.
Yeah, no, I
listen to me for free.
I get
One
it.
article a week and two rants. I'm going to talk to you twice a month for 5 to 10 minutes.
Yeah, you're definitely a ranter. I watch your rants. They're great. But, you know, the thing is, the thing people never realize is, yes, you can say everything's a bubble, everything's overexpanded, et cetera, et cetera. But the question nobody knows the answer to is how much longer can they keep kicking this can down the road?
Well, you know, I tell you, Jason, the answer to me was a lot
Maybe
longer
they can print another 50 trillion and it won't even
answer
matter.
was, for me, for a long time, a lot longer than I thought, but they did raise interest rates 525 basis points, and they cut that 9 trillion bloated balance sheet, 2 trillion almost, okay? That is big tightening, and that will take a year and a half to hit by past analysis, and that's why I'm not going to judge how much it's going to impact fully until the end of the first quarter of next year. And then I'll say, okay, now we know what we're dealing with. And I am expecting the economy to be significantly weaker by then. Stock market's always ahead of that. Bitcoin tends to be ahead of that, why I'm looking at Bitcoin now and Bitcoin peaking and dropping. So I want to be ahead of it, and I want my subscribers to be ahead of it. It's that simple.
And the way to get ahead of it is buy Treasury bills. Buy T-bills.
I don't want Treasury bills. I want Treasury bonds, the longest duration, which is 30 years. Okay. Now, so if you're buying a Treasury bond,
buy 30-year Treasury bonds. That's Harry's advice.
30-year, because the longer the duration, the more the deflationary multiplier is going to happen for you. I'm saying that a 30-year bond will more than double if I'm right about this downturn being 50% deeper than the last one.
And one of the reasons you're saying that is because we're going to have flat inflation or actual deflation, which makes the value of the bond
and
or
when you
cash
blocked in
higher.
a 4% return for 30 years when it should be 1% over deflation or zero, how much is that bond worth?
Yep. Okay.
Normally it would be impossible for a safe Treasury bond to double. We already saw the 10-year bond go up 45%, not the 30. That was probably 65, 70. 10-year bond went up 45% in the 2008 crash in less than a year. That's what I'm looking at. This is your safe haven. Peter Schiff's going to tell you to go under. He's going to be right about this crash. He's going to be wrong about sparking hyperinflation. It's only going to deflate when these financial assets do that. But nobody could print enough money to beat the financial deflation crash. I'm just telling you, almost impossible, or you'd look like an idiot and be shot, okay? So that means that the Treasury,
I think they would have easily said that before the COVID era, and they just printed like crazy. But yeah,
the crash that deflated the last big bubble in history was 29 to 32, and that caused the deepest deflation and deepest unemployment and the biggest stock crash in all of modern history. And this one should be worse, if anything.
Wow.
The size of the bubble.
Yeah. Okay, folks, get your bunker ready. You better be prepared for this one.
I'm in Puerto Rico, man. We're not even going to catch this in the breeze. I'm telling you, we're a quarter of the way. People think we're south of Florida. We're a quarter of the way to Africa.
Yeah. Wow. Crazy. Okay. Well, Harry Dent, thank you for joining us. Everybody, you know where to get the newsletter, HS Dent or harrydent.com.
Harrydent.com.
Yeah. Good stuff. Harry Dent, thanks again.